Hey traders, Nick Shaheen here looking at Tesla. Oh my god, it's down! It's down 5%. Call whoever you call for emergencies. So let's put some sense into it. First of all, the day was bad for the markets. Not terrible, but it was red in these days, minus 0.3% is the new crash. So it was a bad day in the market because it wasn't up. So maybe has exacerbated the situation for Tesla. So it started out, this is a 5 minute chart, so short term, to show you the visual impact of how drastic it looks in the heat of the moment. First of all, this video is to help out some people in the chat room. We traded all day and I gave levels yesterday and they played out today perfectly. The lower end of my level was 571. Today's low was 570. And when I said 571 was the price was nowhere near it. So I had three levels. 595 was one of them, and 580 something was the other one. I can't remember. But anyway, the point is, I'm helping the people in the chat room via video because it's hard to put it on paper. You can go back and forth in the chat room. There is a link to the chat room if you'd like this stuff. We do it all day, every day. It's not free to be in there. It's totally reasonable. I bust my back to make sure that 300 people get all the information they want, and I share 2 write-ups a day and free webinars every Sunday. So there's plenty of value. You can try it out for free. It costs you nothing. Click on the link. It'll take you to PayPal. PayPal is zero for 10 days. Cancel, there's nothing. I just need to know it's a real person. That's it. I have to protect the people in there. We host it on Slack. It's pretty slick. Anyway, back to Tesla. So what do I trade? I was talking to 2 separate people that wanted to buy the dip. One person was already long by selling puts on a bad day. Those puts were a profit because they had sold them on a bad day and time has elapsed and they collected 450 and now they were like 250 to buy back. So you buy them back and the difference is profit out of thin air. You didn't spend anything. Another person was looking to do that and I said it was 575 and I said it's so close to my first number from yesterday, so why do it now? Indeed, fell another $6 since we spoke. And then they asked, should I do it now? I said, if it was me, I would wait. But I'm the type of person that doesn't mind seeing a rally that I'm not in. If you do it for decades, then you see all kinds of rallies every week. And you can't be in everything because nobody catches everything. But doing the right thing sometimes in hindsight is not perfect, almost every time actually, but it's the right thing to do. You do it all the time, you win in the long term. Anyway, back to Tesla. There was no compelling reason to get long going into a morning pre-open binary report on jobs. I do have longer term comments. So, drastic day. Ledge on a headline. What was the headline? I went and scoured. I think the best one I found. This is where was it? Something about dropped net deliveries in China dropped. First of all, who cares? Yes, it matters that they're selling cars, but I thought that they were selling out of everything. So they're selling as many cars as they make. So the bottleneck is not sales, it's production. So it's not that critical to the overall picture of Tesla. Second of all, I also read a report that they had accelerations in other areas like Europe. So if that's the case, so it's rotation from one market to another. They do have stiff competition in China because of local companies, XPEV and NIO that come to mind, and whatever. Anyway, those are the 2 that come to mind right now. The other ones are too small to matter. And the fact that it loses one market but it's growing another market, it's not like an alarm like the story is over. It's not a cheap stock, so it has room to go. In fact, let's talk about that. So I'm not long. I'm looking to get long by selling puts or put spreads into fear. Today was tempting. I refrained. Tomorrow, if it pops, that's fine. Now, onus is on the bulls. What are you going to do with the pop? There's going to be resistance at every ledge. 585, 593-ish. And definitely 600, 602, 600, whatever that number here is pretty darn important on the way back up. So let's zoom out to 60 minutes and see if we can get smarter. Boom, now we have new information. The fundamentals on Tesla are excellent relative to what they were a year and a half ago. I got bombarded in social media because somebody had an issue with how it makes money, whether credit from this credit. Who cares? Who cares? If my paycheck is all from special circumstances, it's still a paycheck, right? The bottom line is to bring in the money, and if they are, the revenues are up and away. Actually, the strong point is, in overview, this blue line right here. So this is their weak point. They used to have to borrow money to exist, like Netflix. They used to, and they knew they needed to borrow money to exist, and that was what if rates went up? They'd be in deep trouble. Well, now cash flow from its operations is almost 6 billion. That was last year. So during a challenging year. So now they can basically dictate their own fate. So if they have a project they want to do, they don't need the blessing from the banks, to which they own a lot of money. So 600 million in net income. Now its running rate is over a billion. So it's a legitimate P&L. Not cheap. Trust me, I'm saying not cheap because it's 20. Oh, that's nice. 20 price to sales. 600 PE, yes, but who cares? They have an E. This is the one that matters. The hope in the stock price. How much hope is there in the stock price? It's come down. It used to be 25. To give you absolute comparisons, this is twice as much as twice-ish as much as the FANG, except for Amazon. Amazon is the absolute dirt cheap one of them all, which is under 4. It's incredible. It's an incredibly cheap company. But anyway, back to the topic of finding a little bit of information below current price. So they still have a little open gap here. So if it falls into the 60s, I'm not going to freak out over it. In fact, if it falls to 547, I'm not going to freak out over it. I'll sweat a little bit. I'll probably change an underwear or two if I'm long. Because if it loses that level, now we're talking. All right. So let me scare the bejesus out of everybody. So far, I've been a fan, right? But I'm totally agnostic, and I'm just following the charts. I don't believe in the fundamentals and the rhetoric as much as I believe in the chart. The media is full of crap. The experts are full of crap. There's only one expert that I trust, and that is price. That's it. And it's right here on the left-hand side of the charts. Just wherever I'm at, look left. So check it out. This super important to hold. Yes, there's a little tick below it for support. Yes, there's a little tick below it for support. Yes, there's a bigger pivot, but this will start a debacle that the bulls will have to deal with. And the outcome of this, you're not going to like what I'm going to say. And first, this is not my forecast, okay? Actually, before first, all stocks have to trade inside the market. What does that mean? Let's say I'm super confident that this will hold for Tesla on its own. What if the market corrects 3 or 4 or 5% in the next week? This won't hold. Regardless of how good the story is on this particular ticker, it has to trade not in a vacuum, but inside the prism of the whole market. Well, the S&P is at all-time highs. With all the tailwinds in the world, all the help is out there, trillions of dollars out of the pandemic, reopening businesses, vaccines, everything is out there. Oh, great earnings, super great earnings. So where is the incremental good news to get more hope into it? New taxes? Nope. Tapering nearing? Nope. We are going to be needing something new to feed the attic. We are used to, hey, we need good news to rally. Well, we've got all the freaking news we have for decades. We will never have a more conducive for upside environment than now, ever. I can say that confidently, at least for a decade. Anyway, so what if that prop goes from the stock market? This will happen. And the downside technical aspect of it is scary. It's in the twos. What? There's a lot of support in between. Like, I would buy the dip here with a tight stop going into that because the assumption is it's going to hold, but I have to stop myself out. I would buy the dip into this one with a smaller tight. I'm not as critical tight stop because now I'm closer to actual value in the stock. Anything at or lower than the POC, that orange line, which is the two busiest zone, anything into 400, I would buy with good conviction, strong conviction, in decent size. Any drop below that would be, all right, I need to double down on whatever longs I have here if I'm long. If not, I need to get long aggressively. leaving a little bit of room for buying the twos if they happen. I can't imagine the scenario that would get us there. In other words, Tesla will not go there on its own. What's the scenario that brings us down to a debacle into the fours? Is a market-wide drop, and at about the time where Tesla is defending this, then somebody pushes it from the blind side. Whoop, it trips, and then the machines take over. So how would it happen? It would unfold in this fashion. So I don't know what to call this one. It looks like a inverse cup and handle, or haven't. Anyway, what I call it is a lost neckline. So draw the line wherever you want. Let's put it here. That's pretty close enough. Some people draw it sideways to have head and shoulders this way. I'm not a believer in that. I don't trust the break of a trend line as much as I do this level. This was fact. Bounce. That was fact. This is forecast. Okay. So I'd rather wait to here and see him lose it and then come down, not able to recover, and then come down and do like this, a little bounce on every support level they can. And then how big of a drop is it? So if you would want to draw it like cup and handle this way, upside down, however it happens, I call them dead ladybugs, not dead. And the drop should be as big as the cup. So I don't usually always give it credit for everything. So I put some nick aspect to it, and I just shared with you the levels that matter on the way down. But the scenario technically is something like this. That's what it would look like. Again, it won't be here on its own. If this is going on, the S&P is corrected. 5%, 10 to 15% correction in the S&P. And Tesla would fall there to no fault of its own. But notice I've said I would buy the dip, right? Everything I said, I would buy the dip. I would buy the dip. Why? Because that's what's worked. So if we zoom out, buying the dip worked. Chasing the rip has not worked. If you're late chasing a stock, it's on you that you chase too late. Resist the FOMO. Some places, it's not an obvious entry point. How can we look at them looking back? If I'm chasing at a place where it has failed or close to it, I'm playing with fire again and again. All right. So if I'm capitulating at a place where that was a base for the rally, I'm capitulating at the wrong time. I'm doing the opposite FOMO. Waited too long. Then they ride it back up, and then they get back in here where this was a pivot zone. You can see it fail. They fought over it. So it's an area of interest. So I don't start longs. They failed. They came back and battled it. Inverse head and shoulders. They came out and failed where? At this big top. So machines are in charge, folks. So pops into 640 are good news, but they're exit points. So don't start longs at 640. That's my opinion. I would not start longs at 640 or 638. Let them take it out. Skip $10. So what? Let the bulls take it out. Then they'll have a cup and handle. So there would be one attempt, and this would hold. So the upside scenario, I should have started with the upside scenario, so that wouldn't upset too many people. This would be the battle if they come above it, and then now they can battle it again over here. So these are lines that matter. Look at this nice cluster here. That's going to matter. This will definitely matter. This is a fail point assumption. Somebody that wants to short it or exit longs, that's the right place to do it. And then you come back down, you build higher low trend, you come back and battle it again until you do it finally. Or you go whoop and you retest this and you fail, whoop, then we go. So what's there to do? Ping pong. How do I trade it? Chase the breach of said ping pong area. I guess I should have started with this one. Damn it. Anyway, I don't have time to re-record it with the proper setting, but let's play it backwards. Okay, so this is it. That's no feelings, no emotions. I'm a fan of the price action. I could care less whether the company succeeds or not. I want to make money while trying the stocks, right? People just jump in with love and hate. Those are two emotions that don't belong with trading. Love and hate, something that actually does you harm or helps you in your personal life. But this is ridiculous how they translate it into here. It makes for a happier trader. It makes for a happier investment if you keep to the actual facts and forget the opinions. Well, you can form an opinion after the fact and manage your opinion risk based on the facts changing or not, or holding up to your story or not. Meaning, if I bought the dip here and I said because it's going to hold, as soon as it failed, I'm out. I was wrong. It failed. Bye. All right, next signing out.